Hello everybody, this is Matador from freetradingvideos.com, 8:34 a.m. Eastern Standard Time on May 11th, and we're looking at the S&P 500 ETF. Kind of a dramatic gap down this morning, and I'll show you it doesn't look quite as dramatic after a huge up gap. In fact, that was the largest rise that the markets had seen in almost over a year, so pretty incredible. But if you take it in context with what's been going on, this huge up gap, nice consolidation all the way up through here. A few notable lower highs and lower lows, but still basically in a consolidation above the 115 area. Very, very nice. And now we're actually testing 115. So the unfilled gap remains, at least on the broad markets through here. But a lot of this gap down, people are still eyeing the European Union and the Euro and trying to figure out what's going to happen there. And they're being a little bit fickle now with their sentiment. So take that into account, especially at the open. And I'll be watching this pre-market lows here, just below the 114.68 area, as we have support. Will we have it again? Will we test through the 115 area and 115.30 and work our way to this unfilled gap up into the 116 mark? That would be, of course, the best case scenario for the bulls. So I'm looking at 116 as resistance on the way back up. Great gap fill, and then 116.50 is perfect. 117, so nice to have those round numbers again. Also 114 now, and the 200 MA on the 15-minute chart isn't anything to sneeze at. And of course all the way down here, so huge gap. Nice to have that. See if we can hold up here. We are running into a daily issue, which is, let me just zoom out here so you can see it more clearly amidst all my lines. The 50 MA is now on the way back up, and if you draw a fib retracement from where things started getting ugly at this symmetrical triangle breakdown, right here, this apex, to here, the 50-yard line is actually right in there. So nice to have this. Let me remove some of this noise. I'll show you why I'm doing that. We are above the 50 MA, or excuse me, the 50% retracement of the symmetrical triangle failure, where we started selling off dramatically. If you take it from the very, very top to the very, very bottom and drop another fib in, we can figure out where the 50-yard line is, and it's still right around in here. So both cases were above the 50% retracement of the last sell-off, and that is X% more bullish. So seeing kind of a consolidation through here is not unexpected, but we do have a bit of a fight on the way back up now, as all these people will be clamoring for the door to get out when it comes back up after living through some of this. So they're not going to want that. On a weekly chart, however, if you take a look at this, huge big bar, again right in the face of 200 MA. Best case scenario here is that we work our way back up into this gingerly and fight our way through the 200 MA in a tradable setup. So not at all rare, again, that we see this sell-off. It's just a little more rare that we get one big glitch. And typo or no typo, when the European Union is having trouble and a couple of those things, and even news is getting disregarded with regards to earnings, then things start looking a little bit sour, and it might take a little while to work our way back up into having a sentiment that is bullish enough to push us up past these resistance levels on the higher time frames. There are a lot of opportunities intraday. You can find that as well. Just be careful how you trade in here, as always. So good stuff. Nice little take on the morning, and I'll be with you around noon to see how things are shaping up and give you a new outlook.